Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 20th of October, 2022, 2023, right? Anyways, the S&P 500 for the second time in the last 6 weeks gave us a perfect example of from failed moves come fast moves. So let's back it up a little bit. If you recall, about 6 weeks ago, I was getting bullish on this day right here because it broke above that range. The next day, it broke down, I sold, and then we saw this market continue lower. Well, this past week, we saw a break beyond that range right there that looked like something that should have held for a potential continued upside. But the pressure of the declining 250-day moving average, that blue line, and the anchor from the all-time high, or this year's high rather, was too much to overcome, and we fell apart from there. Got below that 5-day moving average, and from there we were looking at this as a potential level of support, but obviously that didn't hold. That's why we don't buy while we have a declining 5-day moving average. We look at it as a level of interest and say, if it can recover here, get back above the flat to rising 5-day moving average, then we'll look to get long. Instead, it continued lower, and there's just no reason to be a buyer with that declining 5-day moving average. Now the market is down to and through the 200-day moving average. Just below that, we have that blue year-to-date anchored volume-weighted average price, and we've been looking for this level to be tested along with this 38.2% retracement of the 2022 low to the 2023 high. We mentioned that a couple weeks ago, and at that point I said it looks inevitable that we're going to come down here, but it's more about how it gets there than just the fact that it will get there. And here we are, just a whisker away from that level, and there's zero evidence that this is support. Don't call these things support. We only know support after the fact. It's a level of interest, a level that is interesting because it has the potential to become support, but until it actually shows support, and to me it doesn't mean bouncing up to 427, 428. To me that's not enough for us to say that was a successful test. Maybe that's good for a short-term day trade or something like that, but keep in mind what that 5-day moving average would look like. What we need for that to flatten out and give me confidence that we could actually hold a rally is something more along the lines of this. And then to get long here, although cautiously, because we have that declining red 20-day moving average, the blue declining 50-day moving average. And yes, we have this prior band of resistance in here, which was, which has the potential to become support, which is right at that 38.2% retracement. So we're still looking for that level to be tested, and that's down at about what is this? Let's look together. So at about 416.5. That seems likely. Maybe it does it like this. I'm not here to try to predict, but I want to anticipate the potential scenarios so that if they occur, I can look at it and say, here's how I want to get involved. Brutal week for the markets, down 2.5% to 4%. And again, semiconductors are what we always talk about, or what leads the market. This group, we said if they were to break down, it would likely drag the rest of the market with it, and that's exactly what happened. The IWM is only 3 basis points from its year low. Biotech's 0.5%. The bonds just 0.5% off their low. So let's take a look at some of these other markets like the NASDAQ. And as we know, we rallied up to that trend line. That's where the sellers emerged a week and a half ago. And from there, it's been just a brutal decline. And dip buyers, in my mind, have been getting exactly what they deserve, to lose their money. I know it sounds harsh. I know it sounds brutal, but there's just no reason to try to buy these dips. Wait for strength after the dip. The best buy over here would have been at this point when it made that higher high above the flat to rising 5-day moving average with a stop under here. As it makes a new high over here, stop goes up under there. As it makes this high, stop goes under there. This week I had outlined on Twitter exactly one trade, and that trade was RPD. I'd gotten involved at $50 per share, took a third off at $50.70, another third up here on the breakout. So as it broke this high right here, I had mentioned on Twitter, this is where you want to take some off and sell to the breakout chasers. That was good for a gain of 240. The bounce was stopped out right here, and that purchase of $50 per share resulted in a 3.2% gain in this stock. But if you bought it and were continuing to hold, you'd be losing money. I like 3.2% profits in 4 days in a crummy market rather than holding and hoping that this thing can recover. It's broken now. I have no interest in buying it. So It's all a stock by stock basis. The Russell 2000, it's just brutal. It's at that low. It's only a couple pennies off of the year to date low. And just because people thought it's at support, we only know support after the fact. We rallied right up to the declining 20-day moving average, and that hasn't even turned flat, nor has the 5-day moving average. It's a complete waste of time. If you buy these things, expect to lose money. That's the way it's supposed to work in a downtrend. Institutions are selling hundreds of millions of dollars of these stocks in the ETFs. Why would you on earth think that you can go in there with 1,000 shares, 500 shares, 200 shares, whatever you're trading, and think you're going to make money when they're selling? It just doesn't make any sense. Think about it logically. Semiconductors, as noted, were the brutal result of some brutal selling this week. We can take a look at the anchored VWAP from this high, and subsequent rallies are likely to find resistance in that area, and that's exactly where those sellers emerged on this bounce as the 5-day moving average flattened out and turned lower, then lower highs and lower lows. There's no reason to be a buyer. We're at a level of interest. This anchor from the March low right here provided buyers right in there. But it wasn't just as simple as buying at 141.20 where it was that day. Look at what happened 3 days later. It got down to 140.10. So it's, that when you buy right there and it rallies up, and you're most likely going to sell right there. There's no hurry to get involved in the semiconductors. I think what's more likely is maybe we undercut it a little bit, make a little bit of a bounce, and then come flush down to the 200-day moving average in the year-to-date anchored VWAP. And we want to take it one step at a time. I have no year-end target. There's nothing that I'm looking for this market to do into the end of the year. I want to take it 1 week, 1 day, 1 week, one move at a time. And if those moves take 8 days, 10 days, and then they rally up for 4 or 5 days, distribute for 2 to 3 days, then I want to get short over here. If it recovers and does something like this, well, then maybe I'll get involved over here. I'm not here to predict. I'm here to look at it and say, based on where I am right now with my account, am I interested in being a buyer? No, because it's still got downward momentum. Am I interested in shorting the semiconductors after they've just dropped from 154 to 142? No, but I would like to see it do this, and I would be more inclined to sell short because we have a declining 20 and 50-day moving average, and it seems as though this market is screaming for a test of the 200-day moving average and year-to-date anchored VWAP. Biotechs, we've talked about these over and over and over again, about how they are guilty until proven innocent. Every week, people tell me in the YouTube comments or wherever, hey, Brian, you're so foolish. These things are such a good deal. This is a bargain. It's a value. And even if you're someone who's looking to put money to work for the next 5 years, there's no reason to buy into this carnage. Where you want to be a buyer is when the buyers start to gain control. And we just don't have any evidence of that whatsoever. It looks like it's headed for these lows right in here. And that doesn't mean it's going to be a low. It's a previous low, but downtrends are lower highs and lower lows. There's no reason to be a buyer. Get the theme? That's the theme. The financial stocks, they ran into supply right where they were supposed to. They popped up to the 200-day moving average. And then there was no reason to be a seller, though, not while we were above that while we had a rising 5-day moving average. As we broke down below it, and then we saw the pattern of higher highs and higher lows turn to lower highs and lower lows. Well, the financials are dead. They're just dead money. There's no reason to be a buyer of these stocks either. If banks can't make money when they're paying their savings account 0.25% and they're getting paid whatever it is, 5%, it's a tough environment for banks. Don't be a buyer of these things. If they don't scare you out, they'll generally wear you out. KRE, I just missed a good short in this one today. But the KRE, everyone thought this was the low. I think it's likely to be tested and more likely to be undercut. We're back below the anchored volume weighted average price from that May low after Silicon Valley Bank and the other ones failed. And now the average buyer from that low is losing money. And that is where we're seeing it had previously been support, the anchor from that low. Now it's resistance, and the sellers are in control. Don't buy things where the sellers are in control. It makes zero sense. We've got 2 open positions with Alphatrends. They're both shorts. We've got short this shares of eBay at what was the price? $41.85. And now we've got two-thirds of that one left, and we're also short Twilio from 55.85. So those are two open positions. Have you taken a trial to Alpha Trends? I don't just do this is the part of what I do. I don't talk about it a lot, but these are some great ideas. Being able to get in and out of RPD with a nice gain in a bearish environment and move to the sidelines. So go to alphatrends.net and take a trial there. Thanks for tuning in and have a good weekend.